Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP as well as the vast majority of finance. And I want to start off with this video talking about liquidity. Liquidity has been a talking point on this channel for a very long time, especially as we do address this market, and also as we address XRP. One of the biggest constrictions right now on the traditional world of finance, well, it's liquidity. And again, we always tie it right back to Ripple with XRP, talking more so about on-demand liquidity. I think the biggest talking point is how much capital it actually frees up. We know with Tranglo, for an example, they've actually discussed the idea on how Ripple's product allowed for many customers and clients as, they really kind of start to do their business flows. It allowed them to free up a ton of capital. On-demand liquidity is such a huge talking point as well as a huge use case because ultimately every single major company, organization, business, even financial institution could take advantage of this. And I think right now more than ever we should be talking about liquidity because it's basically gone within the traditional world. All we are utilizing is debt. So here is a quote real quick from Ripple X VP of Growth. Liquidity, usability, and regulatory clarity are the building blocks needed for real world asset tokenization to take off. Now, I will say this tokenization is a huge opportunity because tokenization will also free up a ton of working capital as well as provide a ton of liquidity for many markets. I've talked about this with real estate. Tokenizing real estate actually provides a ton of liquidity. It makes the illiquid asset class extremely liquid. It is a huge opportunity and advantage for that asset class. And then also over here, we do see head of Liquidity Hub at Ripple provides a set of crypto primitives to support tokenization. And shout out to Mr. Fresh Time for this. We do see interoperability fiat to crypto, custody wallet for all tokens, identity compliance, decentralized identifiers, and also zero knowledge proofs, and then also liquidity pools. Bill Cat's original vision. Listen closely to this video.
We have is kind of a set of crypto primitives that any crypto business kind of can need to build an offering. And so that includes these on and off ramps or kind of interoperability, includes custody, so the security of storing your assets. It's kind of the compliance angle, which kind of subsumes the identity component. And then there's these liquidity pools. And so, Ripple is active in more of those than others. But I think what I'm most excited to see again, as it enables this tokenization is really this compliance area grow. I think that's an area that there's a lot of, again, exciting foundational work in the industry, zero knowledge proofs, decentralized identifiers, but figuring out how we put those together to kind of get to that use case is what I'm really excited to see happen.
Yeah. And then also, we do see down here another talking point around on-demand liquidity. So ODL's been extended beyond simply cross-border settlement between fiat currency and repurposed for Liquidity Hub as part of this enterprise tokenization and crypto first enterprise stack by Ripple, exchange and trading platform convergence with XRP ledger protocol chains. Listen closely to this as well.
I guess in reference to my 6 years here, so this other product I mentioned, on-demand liquidity, it's a little bit more mature, been around longer. And I was there while that was being built, and I remember the day we sent our first dollar across that product, kind of using XRP as a bridge asset, I believe from the US to Mexico. And now we're in a position where we're doing, millions upon millions of transactions, billions of dollars. And that journey at Ripple is a multi-year journey, and really building a crypto-first product, making it enterprise-grade, enterprise scale, delivering that utility to customers, was a thing that we actually then kind of went back and reflected on. It's like, other businesses are building crypto-first businesses. What have we built that we can repurpose for them? And a key element of the on-demand liquidity product is accessing liquidity. So that's sourcing XRP from exchanges, kind of dealing with moving it between exchanges, trading it in and out for fiat to facilitate an FX cross-border payment. And so Liquidity Hub was like, our fantastic product team kind of in talking to customers, like saying, hey, let's kind of package this together for somebody else to build crypto. And so what we've launched today is an easy and seamless way for people to kind of very simple APIs to access crypto liquidity, use that within their systems. There's areas of on and off ramps we're investing in this year and kind of other different tokenization areas we see down the road. But we're just kind of excited to have put together what we build in our stack and be able to share it with others.
And I think that this is one of the biggest things, allowing for a seamless on ramp to crypto liquidity. I think that this is probably one of the biggest opportunities right now because, again, we have been addressing banks being constricted. I think that crypto liquidity is going to be a huge selling point. I think that Ripple is really focused on this. I think that they are ahead of the game right now. And there's one last video here, and it's talking about the Liquidity Hub details, smart ordering or smart order routing, distributed trading platform, ML data, liquidity pools, exchange plugins, Ripple wallet, and more. Liquidity Hub soon will converge with public crypto markets by integrating into the public network of XRP Ledger Protocol chains, AMM pools, which is auto market makers. But again, this is more just talking about the Liquidity Hub itself.
I guess in reference to my 6 years.
What I mainly want to address with this video, though, is what's happening around the traditional world and how Ripple can solve it, especially through liquidity. And we know that XRP has been mainly purposed through Ripple as a liquidity source. Now, obviously, that is not XRP's only use case. I think that a lot of people get caught up in talking just about Ripple with XRP and how XRP is sourced with Ripple. XRP has a ton of use case advantage outside of what Ripple is utilizing it for. But I do think that today, more than ever, liquidity should be a focus point. One of the biggest things that I do want to mention, though, is all of the events this week. All of the events this week are going to be centered on the economy and just how bad it is. And I mean the fact that we will probably see a lot of these reports and the data from these reports kind of manipulated a little bit. I think that what we are going to see is we're going to start to see the major individuals that are tied to this. For example, Yellen and even Powell, and some of the elites as well around this. I think that they're going to try to, how should I put it? Not manipulate, but kind of spiral this information in a different way to kind of confuse the general public. Most of the individuals, though, are not going to be confused. I think that for the most part, we have been talking about on this channel as well that most of the data that we are seeing is manipulated. They went back and changed a lot of the reporting around inflation and things like that. I mean, if you look at inflation, it doesn't even really include most of the things that you need on an everyday basis. So all of that is basically a scam when you actually look at the data being reported. But what I want to also talk about is the fact that right now, as we do focus on the things that are like GDP or PCE inflation and all that kind of stuff, I'm also focused on banks. Like Deutsche Bank, for an example, is one of the biggest ones that we've been talking about in the last couple of days because it is one that is on, it's basically on a tightrope right now. This is a company that has a ton of money tied to it. Total assets is sitting at about 1.337 trillion euros. They have a ton of money tied to them, and this is one of the largest banks over in Germany. Now, why am I talking about Deutsche Bank? Well, we've been talking about it recently as this one was close to collapsing. But the biggest thing that they won't tell you about is their CDS. What do I mean by that? Well, credit default swaps, which we will get to in a second. I want to include this video from ITM Trading, and we do see it's not safe. Deutsche Bank, bank collapse. Listen closely to this video.
I mean, look, these guys know what they're doing. If your bank is failing, they get to bail in, take your money that, well, it's not really your money, but the money that you've loaned the bank that you perceive as your money, they get to just take it and leave you stock in the failing institution. Sounds fair to me. Guess who determines how much that stock is worth? The bank that's failing.
See, this is the problem, right? We're about to see a lot more banks going under. I do believe that Deutsche Bank is definitely in the red right now. I think that they are probably one of the biggest ones that everyone should be warned about. We've been focused on their credit default swaps. I seen this post earlier today talking about Deutsche Bank on the 5-year credit default swaps, how it hit a 3-year high. The same thing happened with Credit Suisse before UBS bailed them out. Yeah, I think that this is one that we are watching closely. For an example, here is their CDS, their credit default swap. Sorry, 5-year time frame. I'm going on all time, going all the way back to 2011. Now, during this time, it did hit a 308 on the high. Now, mind you, during this time, there was a crisis happening over in Europe. So this is what caused that to hit a high. But do you see where we are at over here now? This is hitting a massive high, and it really just started back in the end of 2021. This was continuously rising during 2022. We did hit a little bit of a low back in October, but just now, recently, look at it skyrocketing. And this is concerning because guess what? Go back to 2008. We do see credit default swaps played a large role in the financial crisis of 2008 for many of the same reasons described above. Large banks, which traded in CDSs, were forced to declare bankruptcy when a large number of the underlying credit instruments defaulted at once, sending shockwaves throughout the United States economy. And guess what? We still have not learned our lesson. And I want to tell you guys, if you watched the movie The Big Short, which I'm sure a lot of you probably watched it many, many times in the past, you would understand that the CDS, this metric alone, is what caused a lot of noise within the movie if you watched it. I highly suggest everybody go and watch the movie. I think that's a great way to really kind of inform you on just what really does happen before we start to see banks just collapsing out of the blue. It really builds up, and I do think that things are starting to build up right now. I also think that mainstream media trying to tell us that everything is fine is definitely something that's concerning. We do see over here from CNBC, Deutsche Bank is not Credit Suisse. Very interesting for them to really kind of enlighten us on this. Now, obviously, yes, today we are seeing Deutsche Bank kind of bounce back a little bit, but I'm still not sold. In fact, I'm not sold on any of these banks. I've said it, even going all the way back to Friday, I was like, it looks like a relief rally in the banking sector to me. I'm going to be watching these definitely over the next couple days, weeks, and even months ahead. I do think that we are at this significant point in time where banks are just not safe. I don't think any of these banks should be determined in quotation marks safe. I'm definitely concerned about them. I'm worried about what's going to happen next around this entire sector because what we are seeing from 2008, it's the same exact warning signs. And one of the biggest things that we also seen was CNBC actually delist the credit default swap data for 5 banks, including JP Morgan and Bank of America. And here we have that. So CNBC just deleted 5 pages showing the current and historical 5-year credit default swaps for JP Morgan, Bank of America, PNC, Truist Financial, Wells Fargo as well. And there's so many other ones. It's definitely concerning to me. Now, we also do see over here from Wall Street Silver, they also reported on this, and we do see CNBC credit default swap data brushing it under the rug. Yeah, I mean, listen, we're definitely concerned about this because this is a huge metric. In fact, this is probably one of the biggest metrics to watch for that determines on if something's going to go under for a bank. What we are seeing, it definitely is comical, but it's all manipulation. That's why when I go back to the Kabaisi letter here and what we are talking about this week, there's significant events happening this week. But the problem is that all of these events that we are seeing, most of this data is being manipulated. And a lot of what we are actually seeing and what we should be seeing is being hidden from us. Just like just like the credit default swaps. This is a significant data point to watch around banks. And I think that what we are seeing from the mainstream media is them trying to tell us, "Hey, don't worry, the bank is fine. The bank is fine." We seen the same thing during 2008. They were saying the banks are fine. The banks are fine. There's liquidity. We just talked about this. We seen Janet Yellen and also even Jerome Powell say, "Hey, U.S. Liquidity, U.S. credit, it's all fine. Everything's all good." It's not. And also with the 25 BPS hike on Wednesday, that's a big talking point. I think everyone should be talking about that. We do see over here, despite warnings from Elon Musk, the Fed raised Fed rates 25 BPS on Wednesday. I think that this move here could, in hindsight, be seen as the straw that breaks the camel's back. David Sachs, listen closely to this video.
Do they know what they're doing, and how could they do a better job?
No, I don't think they know what they're doing. They clearly reacted way too late to the inflation. We've talked about this before. We had that surprise inflation print in the summer of 2021, 5.1%. They said it was transitory. They didn't react until November. They continued QE for another 6 months. And they've suddenly got hawkish in November of 2021, and they didn't even start the first rate increase until March of 2022. So they were really asleep at the wheel and late to react to the inflation by about 9 months. Now I think they're potentially making the opposite decision, which is they are late to recognize what distress the economy is under right now. And Powell had, there was 3 choices they could have made at this meeting. They could have raised rates, which is what they did. They could have cut rates, which they didn't, or they could have done nothing, basically held pat. And the argument for raising rates is just that, well, we have this inflation problem. We need to keep raising interest rates until the rates are above inflation, and that will bring inflation down. Then you can start to lower rates. That's sort of the conventional view. I think the problem with that view is it ignores that we've just seen a run of bank failures, and there's tremendous stress building up in the banking system from unrealized losses on long-dated bonds, also unrealized losses on commercial real estate loans. And we've barely scratched the surface of seeing that problem. That's, I think, the next shoe to drop in this whole thing. So I think that the right decision here was to either cut rates or to stand pat. You may have seen that Elon said, listen, we should be cutting rates here. There's way too much latency in this inflation data. The economy is seizing up, and we don't need to be raising rates right now. We actually need to be cutting them. I think that probably, if it were me, looking at the upside downside of these decisions, I probably would have just stood pat because, again, we've just seen this banking crisis. Why wouldn't you just wait 1 month to see? Maybe there is latency in the inflation data. Maybe the banking crisis is not over. Why wouldn't you just stand pat for 1 month? You can always raise rates in a month. I think that this move here could, in hindsight, be seen as the straw that breaks the camel's back.
And yeah, I think that right now there's a lot of constriction on liquidity. Liquidity is tight right now on big banks. I think that liquidity is drying up along the way. I think that, some of the biggest warning signs around the economy, it's there. I mean, listen, I don't know how much more people need to see for them to realize that, guess what? We're about to see 2008 on steroids. Because every single metric that warned us about 2008 is signaling red, while most of the general public is being fed lies by the same exact media companies that told you guys that things were safe, things are all good during 2008. And I'm focused on the big solutions. I do believe Ripple also seen 2008. I think that the individuals that are working at Ripple understand how big and what caused the 2008 crisis. And also, I believe that that is what they are trying to solve. And I believe that the liquidity hub, sourcing crypto liquidity, it could very well be a big talking point, and it could be the solution to liquidity. Also, freeing up locked capital. I mean, listen, I don't know if that $27 trillion is still there, but if it is, that's a significant amount to unlock all at once. And it could definitely help these markets because we are seeing tremendous stress within the banking scene right now. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe to notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night wherever you guys are. And this before this has been Nick. Peace out, guys.